What's going on, everybody? This is Jack with the Trading Tribe. Thanks for tuning in today. We have a really cool video that hopefully will help give you maybe another strategy in the markets. So thanks for tuning in again. Feel free to like and subscribe to the channel for more content like this, and we can get into it. And today we're going to look at natural gas, which is a future. It's a commodities future out there in the markets that you can trade. And it's something I trade on a day-to-day basis. So a lot of those prior videos are looking at natural gas as well. But this is really just my preferred trading vehicle. And this is just an easy way to show this example today because it actually happened in the markets. And if we're looking at the chart here, right, we're looking at the 1 day, 1 minute chart. So I am primarily a day trader. Just keep that in mind before we get into it today. And today we're going to actually look at one of the strategies that I use in the markets, especially when price is moving down. And it's what's called a bearish flag or a bearish breakout. And this happens all the time in the markets. It's happening a ton in the stock market as well, with this entire year pretty much dropping. With the S&P 500, for example, right, this has been presenting itself a ton. So hopefully this adds a ton of value and is something that you can even deploy in your trading in the future as well. And if we look at natural gas here, right, on this given day, we can see that it's pretty much just been in a range. So a lot of the time a market is not trending and it'll be stuck in what's called a range. So I have a couple lines here drawn, but at the end of the day, right, natural gas was dropping for a little bit and then it held at this kind of level down here and it held again and it held again, but it also wasn't going up, right? Because every time it did try to push up, it failed, right? It failed and it failed. And this is what's called a range, right? And these levels are just kind of helpers from a visual perspective on just the area, if you will, that price is kind of holding. So this just helps my eyes kind of see kind of that range, if you will. And a lot of this time is pretty choppy. So trading in the range, they call it, is pretty dangerous because it's hard to tell, right, what direction's actually doing. So it's not as clear as a downtrend or an uptrend where you know the direction. Within a range, right, you can get into some trouble because if you're not playing off of these levels up here, you can get hurt in the middle, right? Because if you buy here, for example, you might get stopped out, right? If you short here, you might get stopped out. So you got to be pretty careful trading in the range, they call it. But the nice thing here is whenever we do get a breakout down, right, there's some pretty lucrative ways that we can actually capitalize on it. And depending on the long-term chart, right, sometimes you can even anticipate it as well. So in this case, right, we actually had a breakout down. And if we think about it, right, there's a ton of buyers at this area, and that's why it's bouncing every time it gets to this general area on the chart. And whenever you see kind of a breakout in trading, especially a big breakout like this one, right, you got to think all of those buyers are getting stopped out, right? Because buyers definitely showed up again when it got to this level, but they couldn't hold it at this level. And so we see a massive breakout down, and I'll get rid of this ceiling level. And one of my favorite ways to trade is to trade these breakouts, right? So once we see a ton of momentum and we see a level break, right? This was a support level getting held up by buyers, and this broke, which typically in trading, especially after a big breakout, these levels will hold as a new resistance. So the level somewhat flips, right? It flips from a support to a resistance. And after a big move like this, that area is typically an extremely lucrative short, right? Because there was a ton of shorts that broke that level. And so if it does pull back, it can offer some really nice potential for the trade as well. And we'll notice here in this case, right, this was a 200 tick move. And in the natural gas market, at least 226 that you can see in that little rectangle here equates to about $2,200 profit potential per contract. So tons of potential here to make money and a lot of money as well on the table here, which is one of my favorite reasons to trade it. And there's a couple ways to trade this, right? Some aggressive kind of scalpers or momentum traders will actually trade this breakout. So the second this level does not hold, there are people getting in here capitalizing on this kind of hopeful move here. I don't love taking this kind of initial trade just because, of a lot of factors, but you don't know how far it's going to move. You don't know where to put your stop loss. You don't really know where to put your target as well. And I'm more so a sniper in terms of trading. So I like to wait for kind of what I like in the market. And so this kind of initial trade isn't really my bread and butter. What I like to do for breakouts is actually wait for the breakout retest. So if we notice that level I have here, if we zoom out a little bit, right, we can see that typically, at least in the markets, price will come back to that level. So we can think of it like I was talking about earlier as really a magnet, if you will. And sure enough, right, price does come back to that level here. And this is a really good area to risk off of, right? Because it was a floor, and when it breaks, it's typically going to flip and be the ceiling or the resistance. So again, right, when natural gas gets up to this level, if you're patient enough, you can get in at this level. But really the main kind of concern here is to have your stop loss above the level for a short. So think of this as kind of your risk area. And so the nice thing here is with an entry like this, not only are you immediately in the money, you'll notice the second it got to this level, it dropped really to the penny. So this was an extremely lucrative play, right? Where we could have made about $2,400 if you held for that whole move. This was kind of a long trade. So if we look at the time down below, this was about at lunchtime, right around noon. And this play did not kind of complete till like 1 o'clock in the afternoon. So this was a 1 hour day trade. And, this offered a ton of different kind of potential trades here. You could have scalped this turn, you could have day traded this, or you could have gotten in here as a potential kind of swing short, depending on that long-term chart. So tons of ways to trade these bearish breakouts, but wanted to touch on this today. This is something that happens, like we were talking about, right, all the time in the markets. So hopefully this is really valuable with just how to trade these breakout retests and what to do when you see these occurring in the markets. So thanks everybody for tuning in, and we will be back next time.